Today we're looking at some of the highest yielding ETFs on the market that have managed to keep their NAVs relatively stable. Now, unlike many option income funds that slowly erode capital, these ETFs are proving you can combine yield with resilience. Now let's dive into the 7 standout tickers worth your attention. The first one on our screen here is going to be BTCI, the NEO's Bitcoin High Income ETF. And this is a Bitcoin covered call ETF. And it generates monthly income with a pretty decent distribution rate of 28%, which is going to give you a little over 2% every single month. And this uses a covered call strategy on Bitcoin features, and it's actively managed by NEOs seeking to offer upside potential via efficient exposure to the Bitcoin ETPs. And if we take a look at the share price over the past few months, since October 17, 2024, it's been pretty stable. It has share price appreciation. It's up 22% all time, combined with a very high yield of over 20%. And if we take a look at the total return for BTCI, it is up almost 16% year to date, as well as a total return of 48%. And this is just a return since October of 2024, so it doesn't even have a full year yet. What we can see on the stock chart, that it's very stable. It does have the upside potential that a lot of covered call funds do not have, which is very nice to see. Now the next ETF is another one by NEOs. I've been a huge fan of NEOs ETFs lately because of the upside potential in addition to its relatively high distribution rates. Now, QQQI did win an award for 2025 Best New Active ETF by ETF.com. And this is one ETF that I've been adding more and more to my portfolio because I love it so much. So like the name suggests, it does sell call options on the NASDAQ 100 index, so it captures volatility from mostly tech stocks. And with a distribution rate a little bit lower than people are used to, 14%, it has very consistent yield with limited NAV drawdowns, even as the NASDAQ has rallied. And if we take a look at the targeted benefits of QQQI's strategy, as we mentioned before, NASDAQ 100 index along with call option strategy to generate the income. Additionally, it's actively managed by NEOs and it seeks to take advantage of tax loss harvesting opportunities in addition to utilizing the NDX index options, which is classified as Section 1256 contracts. So you're going to be having that lower tax rate because 60% is going to be taxed at long-term capital gains and only 40% as short-term gains. And this is going to drastically reduce your tax bill that is going to be every single year. As you mentioned earlier, it does have upside potential because it utilizes both sold and purchased NDX index options. And NDX is just the NASDAQ index. And if we take a look at the stock chart all time since January 2024, so it's been out for a year and a half now, and we can see it's been very consistent. It did have this major pullback as many stocks did, but it's recovered right back up to the $50+ range, which is very nice to see, which proves that it does have that capital appreciation, so it's not capped to the upside where most of the funds are. And if you take a look at the dividend history, 14% yield is very solid. Now it's not as high as the yield max ETFs where yields can reach 100%, but this is a very consistent, very stable ETF, and it's something where I've been placing my ULTY as well as MSTY dividends into to build up this core position. And if we take a look at the dividend history, it's been paying roughly 60 cents per share every single month. And of course, we have to take a look at the total returns, which is dividends reinvested. Year to date, it's up almost 5%. And overall return since January 2024, it is up 22.61%. A very solid return. Now the next ETF is going to be BITY, Buy Amplify ETFs, and this is the Bitcoin 2% monthly option income ETF. BITY is another Bitcoin focused income ETF, blending futures, exposure, and options. And it has a targeted 24% annual premium income goal, as well as designed to capture some upside potential from Bitcoin. In addition, BITY uses weekly call options seeking to collect premiums 4 times more often than monthly options, which enables the potential for compounded income and enhanced Bitcoin price returns. And of course, we're harvesting the volatility that Bitcoin provides, which helps with our returns. Now, if we take a look at the stock chart, all time it's up 15% in share price appreciation since April of 2025. So this is a relatively new ETF. It has only been out for a few months now, but it's had solid price appreciation as well as distributing around a 24% dividend yield paid out every single month. And if we take a look at the total return year to date, it's up 17% already. And this is only just from a few months, from late April all the way to early July. And that's really some of the benefits of these covered call ETFs that allow for upside potential. You don't want to miss out on these huge swings to the upside, especially during bull markets. Now our fifth ETF is going to be BAGY, the Amplify Bitcoin Max Income Covered Call ETF, a very similar ETF to BITY, but this is prioritizing income potential. So for people who don't really care about share price appreciation and want to maximize their income, this is the ETF for you. It maximizes income focus by seeking 30 to 60% annualized option premium and a Bitcoin price exposure of about 5% appreciation each week. So while it does not have as much share price appreciation as BITY, it does have some share price appreciation, so we're not completely eroding away week over week. And just like BITY, harvesting volatility and 4 times more options for compounded results. Now, if we take a look at the stock chart, since April 29, 2025, it does have a 15% share price return, which is very similar to BITY, but we have a much higher dividend yield of 29%, which is distributed every single month. So we're collecting just over $1 per share every single month in dividends. And if we compare the share price with the total returns dividends reinvested, it's up 1% more than BITY for a total return of 18% in just 2 months. Now our next ETF is going to be MAGY, the Magnificent 7 Covered Call ETF, and it targets weekly income from the top 7 tech stocks with Round Hill's Magnificent 7 Covered Call ETF. So a lot of people are going to like this ETF a lot because you're getting distributions every single week, and it does have a very high distribution rate of around 34%. Now, I've been a huge fan of Round Hill ETFs for a while, but MAGY is one that stands out because it also pays out its dividends on a very specific day. And if we take a look at the dividend history, it's going to be paying on every single Monday, which is something very different since a lot of ETFs pay out every Friday, but this is going to help make your Mondays feel a little less dreadful by receiving a massive dividend from MAGY, which is the Magnificent 7. And if you prefer to hold MAGS, which is the Round Hill Magnificent 7 ETF instead, which does not have any covered calls on it, it does have very good share price appreciation since April of 2023. So this ETF has been out for over 2 years now, and it's up 125%. An amazing return, no doubt, because it holds the top 7 tech stocks, which is going to be Tesla, Microsoft, Nvidia, Meta, Amazon, Google, as well as Apple. Now this can't be a good video without, of course, ULTY, which is the YieldMax Ultra Option Income Strategy ETF. I don't normally recommend YieldMax ETFs when we're talking about no NAV erosion, but they have been acting more as a hedge fund with this ETF since they changed their entire strategy a few months ago. In addition, you're still getting that great 70 to 80% distribution rate paid out every single week. Now you might be wondering why this ETF is down nearly 70% in share price since inception, and that's because it did have serious NAV erosion back then, but since then they've changed the prospectus. They've actually held the underlying shares of the companies. We can take a look at their top holdings. They hold the shares now, and they allowed this fund to have more flexibility in what it does. As we mentioned earlier, it acts as a hedge fund because they can buy protective puts, which protects them from downside potential. One of the stocks that this ETF was holding was actually Hims and Hers Health. And if you're not aware, it did have a very steep decline in share price from $64 to $30 to $42 per share. This would have had a serious effect on ULTY, but it didn't because it had some out of the money put options which protected it, and we're not really seeing any of that movement in its share price. And ever since its strategy changed back in March, it's been very stable, as we can see from the chart. And this is why it's been one of the most popular ETFs as of lately. You're getting that very high dividend yield, around 70 to 80%, and it pays out weekly, and it does not have much erosion. It's been very stable around the $6 price point. We can take a look at the dividend history. Very consistent dividends between the lowest around 8 cents to the highest 11 to 10 cents. On average, you're going to get about 9 cents per share every single week. And that is going to be it for this video. Let me know what your favorite high yielding dividend ETFs are that don't have any serious NAV erosion. Or let me know if you agree with any of these stocks on this list or planning to buy any more down in the comments below.